Now let's discuss about scope exclusion from IAS 16. Before going towards our discussion, I want you to understand a concept on standards reading. So whenever you read any standard, you need to read the scope of the standard. Why it is important? So when you read the scope of the standard, you will understand the ambit within which a particular standard operates. Let's take the example of IH 16 itself. We read the definition of PP&E, and after reading the definition, we started looking for the assets which covers the definition of PP&E, which means any asset that meets the definition of PP&E. And in that case, the accounting treatment should have been governed by IAS 16. Now comes a part called scope. So all the asset that meets the definition of property, plant and equipment needs to go through the scope filter. Needs to go through the scope filter, and after that all the assets that are qualified or which qualify the definition of PP&E and not scoped out, then in such a case this accounting treatment for those assets are governed by IAS 16, which means these are the assets which are scoped out from IAS 16, even though they looks like a property, plant and equipment, or they do meet the definition of property, plant and equipment. Because the primary reason is that because IAS 16 is a general standard. It's a general standard which deals with the general requirement. If there comes any specific cases in respect of PP&E and which accounting treatment is different or the accounting treatment should be different from the general standard, then in such a case these assets are scoped out from IAS 16 and dealt by some other specific standard. Now let's understand the scope exclusion part. The first is the property, plant and equipment classified as held for sale. So any property, plant and equipment that is classified for sale or held for sale are treated under IFRS 5 rather than under IAS 16. So which means any property, plant and equipment which are held for sale, then their accounting treatment is governed by IFRS 5. The second point is in respect of biological assets. So, in respect of biological assets that are relating to the agricultural activity, other than bearer plants, are covered by IAS 41, and the accounting treatment for those assets are not governed by IAS 16. Now, I'll just give you a hint what do we mean by bearer plants. So whenever we talk about bearer plant, think example of an apple tree. In apple tree, what happens? You pluck the fruit from the apple tree, and you're not going to cut the tree itself. You're gonna keep the tree, and after few times or after sometimes like when the season will come, the tree will give you fruit for the next season. And in such a case, it's a running cycle rather than we are cutting the tree, we are plugging the fruits from the tree. Hence, those meets the definition of bearer plant and the accounting treatment for bearer plants are governed by IAS 16. The third part is the mineral rights and reserves. Mineral rights and reserves are not governed by IAS 16. The recognition and measurement of exploration and evaluation of minerals and reserves and these assets, these are governed by IFRS 6, which means any asset that it is related to exploration and evaluation of any mines and reserves, minerals and reserves that are governed by IFRS 6 rather than IAS 16. The fifth part is the investment properties accounting for under using fair value method under IAS 40. In the scope part, we understood that any investment property that is classified, any any investment property which are measured subsequently at cost, the accounting treatment for that particular investment property is governed by IAS 16. However, for those investment properties which are not measured at costless accumulated depreciation, they are measured at fair value method, and they are measured in accordance with IAS 40 rather than IAS 16. Now here I just drawn out an example of PP&E held for sale and how the accounting treatment is different for this property, plant and equipment under IFRS 5 as compared to IAS 16. Under IFRS 5, any property, plant and equipment that are held for sale, first of all, they are not depreciated. Second, they are not tested for impairment, and the measurement is done at fair value less cost of disposal. This is different than revaluation method and the fair value method because we are considering the cost of disposal as well. Hence, this do not mm, this accounting treatment is significantly different from the accounting treatment that we learn under IAS 16 because the accounting treatment done in accordance with this particular way provides better picture to the users of the financial statement rather than treating it in accordance with IAS 16 and making accounting which we used to do typically. So these are the scope exclusions under IAS 16.